Hello, XRP Army, and welcome back to the Crypto Public, your go-to channel for the latest energy updates and digital assets. Before we get started with today's business, make sure to smash that like button, ring that bell, and subscribe to the Crypto Public, bringing you updates every day at noon and 7 p.m. Eastern Standard Time. Just a reminder, this video is for educational purposes only. This is not financial advice. Always do your own research before making any investment decisions. What if the biggest opportunity in crypto isn't another meme coin, not another bull run, not even Bitcoin? What if the real story is the quiet transformation of the global financial system itself? Right now, governments, banks, asset managers, and regulators are exploring how trillions of dollars in real-world assets can move on to blockchain networks. And one blockchain keeps appearing in those conversations: XRP Ledger. While most investors focus on price charts, something much bigger may be happening behind the scenes. Because the race to tokenize real estate, bonds, equities, and money market funds has already begun. And if this trend continues, it could reshape how financial markets operate over the next decade. But here's the key question: is XRP actually positioned to benefit from the transformation? Let's find out. Over the last few years, tokenization has gone from a niche concept to a rapidly expanding sector. On the XRP ledger, the market value of tokenized real-world assets grew from roughly 560 million at the end of 2022 to more than 4 billion in early 2024. That's not a small increase. That's a dramatic expansion in a relatively short period of time. And it signals something important. Large institutions are no longer asking whether blockchain technology has potential. They're asking how they can use it. Commodities, fixed income products, equities, real estate. These are the asset classes increasingly being discussed for blockchain-based infrastructure. The vision is simple: take traditional financial assets, represent them digitally, allow them to move more efficiently, reduce settlement times, improve transparency, lower administrative costs, and potentially create entirely new forms of market access. Now, this is what most people miss. The biggest opportunity may not be replacing traditional finance, ladies and gentlemen. It may be upgrading it. Because when institutions manage trillions of dollars, even small efficiency improvements become enormously valuable. To understand where this market is headed, we need to understand a critical distinction: representative tokens and distributed tokens. Representative tokens are essentially digital records. The blockchain acts as a bookkeeping system. Ownership information is stored digitally, but many of the traditional processes still occur off-chain. In other words, the blockchain records ownership, but it doesn't fully transform the market structure. Distributed tokens are different. These assets can be held directly by investors, transferred on-chain, traded more freely, potentially used as collateral, managed within blockchain ecosystems. This represents a much deeper transformation. Instead of merely digitizing records, distributed tokens digitize the entire ownership experience. And that's where things become complicated. Because technology is not the primary challenge, regulation is. The infrastructure largely exists. The framework is still evolving. Let that sink in, ladies and gentlemen. It's very important. And that's one of the biggest reasons adoptions may unfold gradually then explosively. Short-term noise, long-term structure, I always say. That distinction investors should be focused on. Every major financial innovation eventually encounters regulation. And tokenization is no different. Different countries have different security laws, different investor protections, different compliance requirements, different tax frameworks. A tokenized asset that works in one jurisdiction may face restrictions in another. This fragmentation slows global adoption. Institutions don't simply need working technology. They need legal clarity. This is why many industry participants are closely watching regulatory developments in the United States, particularly legislation designed to provide clear rules for digital assets. Some analysts believe future regulation clarity could become the foundation upon which global tokenized standards develop. Not because the United States controls the market, but because large financial institutions often prefer operating within clearer, defined legal frameworks. The real shift may come when regulation stops being the obstacle and starts becoming the enabler. But here's where it gets interesting. History suggests this process takes time, a lot more than most investors expect. I want you to think of the New York Stock Exchange transformation as a historical example. In the late 19th century and early 20th centuries, financial markets were dramatically less efficient than they are today. Trading involved paper certificates, manual record keeping, physical transfers, slow settlement systems. Many investors today assume modern markets appeared overnight. They didn't. The evolution took decades. Infrastructure improved step by step. Regulations matured. Institutions adapted. Technological advanced. Only then did modern capital markets emerge. Tokenization may be following a similar path, not because the technologies are identical, but because financial systems rarely transform instantly. They evolve layer by layer. The lesson is clear. Infrastructure revolutions often appear slow in real time, until suddenly they look inevitable in hindsight. Let's talk about Dubai's tokenized real estate experiment. One of the most fascinating real-world examples today is coming from Dubai. The Dubai Land Development has been exploring tokenized real estate initiatives. Properties can be represented digitally. Ownership information can be managed more efficiently, and investors gain visibility into assets through blockchain infrastructure. Currently, access remains relatively limited, but the broader vision is significant. Officials have projected the potential for a multi-billion-dollar tokenized property market over the coming years. Some estimates point towards a market reaching approximately $16 billion by 2033. That's important because real estate has historically been one of the least liquid asset classes. Buying property is expensive. Selling property is really slow. Access often restricted. Tokenization could potentially change that equation. Imagine ownership structures becoming more flexible. Imagine secondary markets becoming more efficient. Imagine broader investor participation. Write that down. That's really important, and let that sink in. Of course, those outcomes remain dependent on regulation adoption and market demand. But the direction of travel is clear. Governments are beginning to experiment, and experimentation often precedes adoption. I want you to think about medieval trade routes. Merchants moving across continents faced enormous friction. Every border introduced delays. Every kingdom had different rules. Every transaction carried complexity. Today's tokenized asset market faces a similar challenge, not because goods are moving physically, but because capital is moving through fragmented legal systems. The technology may allow seamless transfers. The regulations often do not. Just as trade networks became more efficient through standardization, tokenized markets may require greater regulatory alignment before achieving their full potential. The infrastructure is emerging. The coordination is still developing. Why the next wave may be very boring, ladies and gentlemen, because one of the biggest misconceptions in crypto is that innovation must look exciting. In reality, some of the most transformative developments are incredibly boring. It's like watching paint dry on the wall, unfortunately. Money market funds, treasury products, cash equivalent instruments, settlement infrastructure. These aren't the assets that dominate social media discussions, but they represent enormous pools of capital. Many analysts believe these categories could become among the first major winners of tokenization. Why? Because they already have established demand, established pricing, established liquidity. Tokenization doesn't need to reinvent them. It only needs to improve efficiency. This is why some industry observers believe cash-like instruments and equities could become major areas of growth by 2027. The opportunity isn't necessarily creating a new asset. It's improving how existing assets function. Prices reacting, systems evolving, and the system may matter more than the price. Ladies and gentlemen, when international banking networks expanded during the 20th century, one development changed everything: standardized communication. Before, systems like SWIFT, cross-border financial messaging, was slower and more fragmented. Banks needed a common language, a common framework, a common process. The results was a dramatic improvement in global financial coordination. Tokenization could represent another chapter in this story, not replacing financial markets, enhancing their connectivity, creating faster settlement, greater transparency, and potentially more efficient movement of value. History shows that infrastructure upgrades often create enormous economic effects long before the public fully notices them. Why XRP keeps appearing in these discussions. So where does XRP fit into all of this? The answer lies less in speculation and more in infrastructure. Ripple has consistently focused on payments, settlement, liquidity, and institutional engagement. The XRP ledger was designed with asset insurance capabilities. token creation, transfers, settlement. These characteristics make it relevant to tokenization discussions. That doesn't automatically guarantee adoption. It doesn't guarantee future market dominance, but it explains why institutions continue exploring use cases involving the XRPL ecosystem. The important distinction is this: potential is not certainty. Narrative is not adoption. Yet adoption often begins with infrastructure. And infrastructure is exactly where many of these conversations are occurring. I want you to imagine the early railroad networks of the Industrial Revolution. At first, many focused on the trains, the excitement, the speculation, the headlines. But the real value came from the network itself, the infrastructure connecting cities, industries, and markets. Today's blockchain sector sometimes resembles that period. Many investors focus exclusively on asset prices, but the deeper question may be, which networks become useful infrastructure? Because when infrastructure becomes embedded within economic activity, its significance can extend far beyond short-term market cycles. Ladies and gentlemen, over the past 2 years, XRP has delivered strong performance despite substantial volatility. That's worth noting, because volatility remains one of crypto's defining characteristics. Markets move quickly, narratives shift rapidly, sentiment changes overnight. Yet institutional engagement has continued. Pilot programs have continued. Tokenization initiatives have continued. And discussions around digital financial infrastructure have continued. That's why many long-term observers focus less on weekly price movements and more on structural developments. The question isn't whether volatility exists. It does. The question is whether adoption is progressing underneath the volatility, and increasingly institutions appear interested in finding out. So what happens next? The next 5 to 10 years may be the most important period for tokenization. Not because everything will happen tomorrow, but because foundational decisions are being made today. Regulators are developing frameworks. Governments are testing blockchain solutions. Institutions are exploring digital asset strategies. Infrastructure providers are building systems. Some projects will fail. Others will succeed. Many pilots may never reach meaningful scale. That's normal. Every technological transition follows a similar pattern: experimentation, refinement, expansion, adoption. The key takeaway is that tokenization appears increasingly aligned with real economic activity rather than purely speculative enthusiasm. And that distinction matters because durable markets are usually built on utility, not hype. So, ladies and gentlemen, when most people hear the word crypto, they think about prices, charts, bull markets, bear markets. But the larger story may be unfolding elsewhere, in boardrooms, regulatory agencies, financial institutions, government departments, and infrastructure projects. The rise of tokenized real-world assets suggests that blockchain technology is gradually moving from experimentation toward practical implementation. The process may take years, perhaps even a decade, but that's how often structural change happens: quietly, incrementally, then all at once. Whether XRP ultimately becomes a major beneficiary remains uncertain, but its involvement in payment infrastructure, tokenization discussion, and institutional initiatives place at the center of an important conversation, a conversation about how many financial markets may evolve in the decades ahead. Because while headlines focus on daily price action, the real transformation may be happening underneath. Short-term noise, long-term structure. And that structure could define the next era of digital finance, ladies and gentlemen. If you enjoyed this breakdown, make sure to like the video, subscribe to the channel, join the Wolf Pack, and turn on notifications so you don't miss future deep dives into crypto, macroeconomics, tokenizations, and my rant that follows this, and the evolving financial system. And let me know in the comments, do you think tokenized real-world assets become a $1 trillion market? And can XRP play a major role in that future? Thank you for watching. I'll see you in the next video. Well, happy Friday, everybody. Today is a full-blown massacre. Hope everybody's enjoying today and enjoying the ride. I want to welcome all the new members of the Patreon, the Crypto Public Desk Monthly, all the new members of the membership channel. Remember, ladies and gentlemen, one good tip from the pits can easily pay for your entire year subscription. If you want the deeper macro research and learn how to take advantage of all of this chaos, come and join over 560 active traders and investors in the Patreon, the Crypto Public Desk Monthly. Ladies and gentlemen, you look at today's market and what's happening. I know a lot of people are probably pretty pissed off upset. People are getting cut up like sushi. They're getting carried out in body bags today. Why we're the remora is because we feast on the sushi. This is where your Gucci conviction, Gucci clarity is going to be tested. So I hope that everybody's got their frosty beverage while you're walking up this cold, frosty mountain. Look, if you look at the DXY right now, again, it's spiking. When the dollar rallies, none of this is financial advice. This is just my own professional opinion. Anyone takes any capacity. But if you're looking to get help with your trading and investing, and you need your hand held with mentorship, come and join the Crypto Republic Desk Monthly. We make sense in helping people take advantage every day of this. Again, the DXY at 100. When that moves, everything else goes the opposite way. The dollar strengthens. Commodities are priced in dollars. That means they will drop. Again, the markets right now, and if you look at this tech sell-off, we're going to get through this. Major things. The tech is selling off. People are taking profit. They want to have enough dry capital to take advantage of the IPOs coming out. ZEC coin is getting whacked, totally whacked. A flaw was found using an AI, and they don't know if there were a lot of coins minted or not a few years back. So that's getting blown out, carried out in body bags. So that's further throwing kerosene on this fire. But again, we see gold right now. If gold breaks down below 43.65 on the daily, look out below. These are the what-if forest. We're at the cliff in the what-if forest. You got to ask yourself now why you're in crypto. What was your time horizon in crypto? How is your portfolio structured in crypto? Every day on our videos, and again, we're at noon and 7 p.m. Eastern Standard Time, Monday through Friday, and on the weekends, we're going to be at 10 and 3 Eastern Standard Time. 10, we're going to have ICP videos for everybody in the ICP part of the Crypto Republic. We love you. We love everybody. I thought it was very important right now to get off phones and have some lunchtime with everybody here right now to go over this. You cannot be afraid about what's happening right now. If you're overexposed and you're trading with leverage and you got stopped out, you just learned a big, valuable lesson. Because I told you that trading is an occupation. It's a profession. You got to do this every day. Every day. So the quicker you learn the skills to survive, the better off you're going to be. We don't like trading with leverage. I don't like it. It's not for me. I had one of the most horrific margin calls early in my career. I'll never forget what happened. But again, the market is going home for the summer. Everybody knows selling May, go away. Where that really came from, when people sold and went away in May, they gave people and companies time to come out with the product, the G.I. Joe with the Kung Fu grip for holidays. Because they knew they could go away. And when everybody came back in the fall, they would wait for companies to come out with their new products, their new toys. I love the G.I. Joe with the Kung Fu grip. Okay? Because they wanted to see companies hit their earnings. They were able to get involved at discount prices because they understood discipline. So, ladies and gentlemen, the whole world's taking the summer off. The whole situation in the Middle East, that's taking second stage to all the beautiful IPOs coming out. Once people start to sell in certain segments and take profit off the table, the whole market does it. The market's full of lemmings. It's groupthink. You're long-term members of the Crypto Republic right here and you listen to my rant. You're so far ahead of most people understanding what's coming and why. If you write down what I say every day, I told you the DXY is my favorite thing, besides the Widowmaker in Japan. But understand this right now. Why are you in this market? These are going to be some of the greatest DCA opportunities for the rest of the summer. So before you say, I'm throwing in the towel, crypto ain't fair, I don't like this, going that. Hey, look at ADA. He's tapping out. He's taking a break. How are you taking a break? This is a financial war. You're a financial mercenary. You can't be a financial mercenary part of the year and say, I don't like this. You do this every day. I told you I was designed for this. I live this. That's why the family office that retain us smile when this happens, because they know it's coming. They know it's coming. This should not surprise you what's happening in the market. Does it? Ladies and gentlemen, XRP, ICP, HBAR. This, in our opinion, is it. This is the final act of things being so on discount before Operation Print It to Win It begins by the end of the summer. Because by the end of the summer, things are going to look very different for the economic situation. And it's going to be clearer. This is a very big discounted opportunity right now if it makes sense of your own personal situation. But again, some of the tips and the pits that we put out are killing it. If you look at what we did with the yen against the Kiwi and the Aussie, it's just massacring. It's just raining alpha. If you need help with your trading and you want to take advantage of this and you need some mentoring in your handheld, come and join the Crypto Public Desk Monthly. There's no reason not to if you're here listening and you found us. But ladies and gentlemen, as the DXY rises, every commodity priced in dollars gets crushed. Look at gold sitting right now, 400. I'm sorry. I have to put my glasses on. It's down that. Look at gold at $4,326 right now, down $149 for the day. If it cracks 43.65 on a daily, look out below. Oil's pulling back. So you would think right now with oil pulling back below 90 that the market would have a rip your face off rally. It's not. There's other things at work going on right now. I will not talk about that for free right here. You want to know what's going on, the other things at work, you will join the Crypto Public Desk Monthly and you will enjoy taking advantage of this. And you will understand why, being a financial mercenary, you get to go first and understand what family offices and other sovereigns and hedge funds hear from us because they retain us. Why it pays to be correct. Why it pays to be a winner. I don't like it. I made a video. It's going down. Sell your holdings. Or come and rant and say, you know, you think I'm an AI person. And I'm not a crypto influencer. I'm a financial mercenary. Our organization is a very old financial mercenary. That's what we are. I feel sad for everybody right now that's going to feel a little uncomfortable about the markets. Does XRP go lower or not? Ladies and gentlemen, right now the markets are going lower. We told everyone that retains any capacity when we got out of our Bitcoin long, it wasn't at the top. We knew we were going low, and there's reasons of why. Compliance department won't let me talk about this over on YouTube, but it's clear as day is why this is going on. So you learned on the floor of the New York Mercantile Exchange to be right. You learned to be right because your family name, your money, your reputation, everything was on the line. See, I remember getting hit in the head in Building 7. You know, I remember getting hit in the head. I'll never forget it. And then when I went to One North End, I'll never forget it. I'll never forget what I learned from these. But if you want to learn and you needed help, I got a question for you. Do you need help with your trading? I can't answer that for you. I can give you the answer if you need help. If you need help and you want your hand held and you want a plan and you're looking for a sense of direction, come and join the Crypto Public Desk Monthly. But look, we got until the end of the summer, as far as I'm concerned, before Operation Print It to Win It starts to begin. Because once that begins, this will be nothing more than remembered as turbulence on a plane ride on a family vacation. But if you're going to sit here and be afraid, I get excited for days like this. These are the greatest days ever in finance. I say this because we prepared for the crash. Because we have a trading plan. Do you have a trading plan? Or do you just wake up every day and say, oh, I'm going to go watch a couple of crypto videos and hope I'm right? See, that's luck. There's no room for luck in this game. It's all skill. But as oil crashes right now, I want to hear in the comments right now below, and I'm going to get back to everyone's comments. I'm sorry, I haven't had a chance to answer them. Why do you think that oil is going lower, but the market's getting wiped out right now as we're recording this? The market, Dow's down 420 right now. NASDAQ's down 974 points. It's down 3.21%. Why do you think it's down? Ladies and gentlemen, the markets are moved by groupthink. They're lemmings. On the floor of New York Mercantile Exchange, that's what we call them, lemmings. At least the men that taught me, that's what they called them. I didn't invent that. Everybody does the same thing. That is the one true advantage of Wall Street and evil of Wall Street. Advantage, evil. Evil because everyone gets whacked at the same time, cut up like sushi. And advantage is because we know they're going to do it. And before they do it, if you're positioned, it's raining alpha. These are the things that you're taught to grind this out. Again, you don't have to be some guru to do well in the financial markets. You just need a plan. Anybody can do this. But ask yourself this, as everybody goes to the exit now, this is what happens. Selling may go away. Crypto speculative, ZEC, the fact that they found that floor using a very good LLM, and they can't tell you how many things were minted or not, that's issue right there. People want that money, that dry powder for the IPOs coming out. They're not going to miss that. This causes a chasm. You had some people talking about Palantir, what's weird about that going down. Ladies and gentlemen, everyone's got their own reasons about what they do and why. See, I have a weekly plan, a monthly plan, a quarterly plan, and a yearly plan. We help develop this for people that retain us in any capacity, whether that's family offices or teaching the people that retain us how to build their own family office with what they have. Because everybody's important. Because we're in this for survival, ladies and gentlemen. We're in this for our families. That's it. So ask yourself this question. Do you have a plan? Or this is just numbers going up and down and you hope that you were right about it? You tactically trade certain instruments to build your stacks of high society, your WAD. You buy undervalued assets. You buy assets in the sectors of the building blocks for tomorrow. I go over these every video here. And then the tips and the pits, our members are just murdering it. They're murdering it. Ladies and gentlemen, I love you all. Keep the Gucci conviction. Keep the Gucci clarity. Don't get caught up like sushi here. Hold back. Step back. Step back. Relax. Let the market unfold. Ladies and gentlemen, we're here for the market. The market's not here for us. Never forget that. But again, if these levels cave in, there's structural damage done to markets. There will be time to take advantage for this. The only thing that we don't really have enough of in life is time. See, you can restore your good name on the battlefield. You can restore your wealth. The one thing we don't have enough is time. Time is the greatest thief of them all, ladies and gentlemen. When a moment's gone, it's gone. Stay tight. Stay frosty. Gucci conviction all the way. Gucci clarity. I love you all. I'll see you at 7 o'clock, ladies and gentlemen. But understand something right now. It's the people who position themselves early, not randomly, but intentionally. Because some moments in history are loud, but the ones that change everything are quiet right up until the moment they're not. And again, ladies and gentlemen, none of this is financial advice. This information is for educational and entertainment purposes only. Ladies and gentlemen, this is one of those moments. Do not blink because the world is distracting you with noise, while XRP continues to develop behind the scenes and building momentum in the broader digital asset landscape. Stay sharp, stay informed, accumulate knowledge. Your move now will be remembered. This is not the end of the story. This is just the beginning. This opened your eyes, smash that like button, ring the bell, and leave a comment with your thoughts. Turn on notifications, and most importantly, subscribe to the Crypto Public. We break down the major global banking trends shaping digital assets today, giving you content, clarity, and research you can use. Don't just watch it happen. Stay informed, stay ahead, stay in the Republic. I love you all.